Hello, hope you're doing well. Today was a crazy day in the market for me. It was a great day. It was a good day to trade. It was an interesting day for me, and we'll get into it. I'll start by just talking about the general market structure of today. So we opened the day with a new day opening gap. You can see that by this black box. New day opening gap is the difference between the closing price on Wednesday at 4:45 and the opening price at 6. That's this black box. So in the London session, what happened? It was kind of melted down from it. You can see this low, this other low, going into 9:30. And I outlined this on the live stream this morning. What I wanted to see was us go up into this new day opening gap, return, and take out these equal lows. You can see they're beautifully equal. I thought coming into 9, you can see we came down. You can see it on the 5-minute here. We came down, made the equal lows. Then at 8:30 news, we moved up, and we were hovering right below the new day opening gap prior to the 9:30 open. So remember, what do we top down on the weekly chart? We're expecting a down close on the weekly candle. Take that out. We're expecting a down close on the weekly candle. My apology for all this liquidity. I will fix the settings on those so they don't show on the day higher time frames. But we were expecting a down close weekly candle. We were targeting this weekly fair value gap. Down close weekly candle means down close days. So if we're expecting down close days, we tapped into this fair value gap up here, expanded lower. Yesterday we expanded lower. So then now that we're leaving this fair value gap and we took out this low, we opened with a gap down. So it really wanted to get down to this weekly level. So what I was expecting, and this is pretty common, it does it with new week opening gaps as well, us to come up, tap into the gap. You can see we took this buy side and then reverse and target these sell side. How did we do that? Leading up into 9, you can see we kind of moved a little sideways. 9 o'clock happened. We came down, didn't take that low. We came down, moved up. I had the green line as the buy side. It's the high of that candle. Came up, went just over the candle high. But what I was really looking for was the entry and exit of this black box. See, we broke lower, shift in market structure. We retraced higher and came lower. You can see here on the 1 minute, once we broke this low, it started into a sell program targeting the sell side. So it retraced, came down, completely disregarding this 5-minute and 1 minute fair value gap. Came back up, broke lower, left this breakaway gap. You can see the volume imbalance. We came down lower. This candle came up to it perfectly. Came down lower, came up, down, up. And all this was happening while this dollar was putting in this low. All this was happening as the dollar was coming off of this low. So you can see right here, we're going higher, we're going higher, we're going higher, making new highs. Come into the 10 o'clock hour, we break. Came up here, respected this fair value gap for a while. And I'll talk about our trades in a moment, but we tried to go short off this. And it was worth noting that at this time right here, NASDAQ was taking these lows. So you can see on the 5 minute, we're above this low on ES right here. NASDAQ was below that low. NASDAQ already took that sell side. Came down. Then they both eventually, around noon, got below that London low. But at the time, it didn't. We had this barcoding, came down, came up, back into this fair value gap, came down lower, taking that liquidity, came up higher again, and then finally, after 10, we came down, attacking this low at the same time that NASDAQ also took that London low. Came through, lower. This is where we finally tapped in to this higher time frame weekly fair value gap. Came down, lunch. See this come up, come down, come up into this fair value gap, came down. Let's measure out the fibs for this weekly fair value gap. See, we just visited the upper quarter. So came down, wicked through it. The candle bodies all came pretty close, but they stayed above the quarter. Retraced up. Things got interesting again. So remember, 1:30 ends the lunch macro. It ends it by taking out this low. We have a sharp candle wick up, followed by a shift in structure. Comes down, drops into this fair value gap. Comes up, breaks above this fair value gap. Which is also shifting structure on the 5 minute. You can see here on the 5 minute, we have the low, high, lower low, equal high, lower low. Finally come up, shift in market structure on the 5 minute. We take these highs, break through this fair value gap on the 1 minute. And then you can see right here, we come down. This wick comes down. It doesn't break this down close candle. The body comes back up, respects the fair value gap. Come in, you can see the bodies respecting the fair value gap. You can see the lows of the wicks meeting the low of the fair value gap perfectly. We come up, come back down to consequent encroachment of this fair value gap. So we're using this as an inversion now. And then it continues higher. And this price was actually a lot cleaner on NASDAQ. Let's see if I can show you. For example, this candle right here. So we had an immediate rebalance on ES. It came up, broke above these highs, came down. The low of this candle touched the high of that candle. And then it came up to this inversion fair value gap. This fair value gap right here is a 1 minute inefficiency inside of this 5 minute inefficiency. You can see us come up above it. We did close these two bodies above it, which I didn't like. At the time, the reason I didn't try and take a trade off of anything in here was because we had these candle bodies close above it. We had these candle bodies close below it. and then it came up when this wick took that wick, and we came down and then started treating it like a proper inversion. Came down to consequent encroachment, came up. Then when it came down here, you can see it them wicking down, but the bodies are respecting this fair value gap. And then right at that time is when the dollar made an aggressive low. You can see it right here in the background. The dollar is this yellow line. The dollar made this aggressive low, which resulted in the indices making an aggressive high. We came up, came back down, respecting this fair value gap. And then what it continued to do, really from the beginning, really from when we swept this liquidity, which is also the lunch low. See, notice, lunch low, 130, lunch macro, ends, we sweep it immediately. So this was the low of the day, and you know it was the low, or at least in the PM trading session, we were signaled that it was going to reverse because we came down into this higher time frame, weekly and daily objective, which was this orange. So we met the weekly and daily objective. In the lunch session, we made a low, came up right at the minute the lunch session ends, we sweep that low. And remember, when you sweep sell side liquidity, ICT said you can then target buy side liquidity in the one setup for life video. So it was a culmination of the dollar dropping. We had the dropping dollar. We had the higher time frame target met. We had then we had the sweep of lunch liquidity. We had the shift in market structure here. And then we returned, and then you can see from the moment we swapped this, we started respecting. We went into a buy program and started respecting all the bullish PD arrays very nicely. Respected this fair value gap, came down, down close candle, shift market structure, came down, didn't violate the down close candle, respected this as an inversion, came up, came down, never really taking out these lows. Remember these down close candles, it's respecting these down close candles, come up, respect that down close candle, come up, comes up, shakes it up, shakes a little buy stop, takes that swing low, but that really allowed it. And then with the dollar dropping even more aggressively to go higher, we made this fair value gap, came down into it, came down into it, came down, up, down, and then we took these equal highs that formed in the morning. We retraced up where this turning point right here, if you measure out 50% of this up close candle, this bearish order block, look where the bodies stop. We meet it to the tick here, we wick above it, the bodies respect it, then it turns lower. Come down, formed a breakaway gap. Came down, formed a breakaway gap, formed another fair value gap, went into it once, went into it twice, tapped the bottom of it, lower, fair value gap. We had these bodies, these candle bodies were respecting this fair value gap. Came down, fair value gap, candle bodies, respecting it, priced lower, priced aggressively lower. So this was taking out anybody who did get long here after sweeping the buy side liquidity. You can see in the background the dollar, right? As we made that high, the dollar after that started making higher highs and coming back on all this downward price action. And price came back down into this weekly fair value gap for the close. So that was ES market structure today. Let's talk about our trades. Today was, I guess, an emotional trading day for me. I think if you go and watch the live stream I did this morning, it was intentionally silent, but I called this scenario to the T. And later in this video, I'm going to talk about the difference between the trader, the analyst, or the analyst inside of you and the trader inside of you. And ICT's talked about this himself, and I'm going to show you how they are two different people later in the video. Right now, we'll go over the trades. So, how did I know? Well, okay, let me start by saying this was our first trade. Go watch. I would really suggest watching this morning's live stream on 2x speed. I called that we were going to come up into this new day opening gap and reprice price lower. Why did I think that? Again, I said it a little bit in the morning or a few minutes ago. We're expecting a down close on the weekly and a down close on the daily. This zone, we're right above it, and we have these equal lows. So we have equal lows. We're sitting right above this daily and weekly target. We had gapped down. So definitely just, if you're here right now, I'm expecting that you've already gone through and watched a good portion of ICT's videos. Something he has talked about in the past is when we create gaps like this, we can return to the gap to get people think we're going long and we're going to fill the gap, and then it reverses. So when you gap down, it's common for price to return to the gap and then send price lower. It acts as a PD array. It's a premium PD array to then sell at a discount. So I was waiting for that. And this trade made me very frustrated because you can see I entered kind of on the retracement into like using this as an inversion / using this fair value gap. So you can see we entered right below this fair value gap. And when you enter fair value gaps, it is normal to either place your stop at the high of that candle, or you can place it at the high of the third candle that makes the fair value gap. And ICT's even said, and then if you really, really want to be safe, I think somewhere in the 2022 model playlist, he's explained like you can put it up here. I put it up here, and it ran against us. And why this was really frustrating was because on NASDAQ, this same fair value gap, if we entered on it and had our stop in the same place, we wouldn't have got stopped out. So I'm going to go over to NASDAQ and show you. Give me a moment, please, to get these charts resituated. Actually, oh God, now I have to go back to ES. Okay. I just want to highlight the candle. So we entered in ES on the 940 candle. And this is kind of a 2022 model entry. That's what we're going for here. You can see we came up, took a significant 15-minute high. We cleared out everything on London. We cleared out all the London trading. Came into an area, new day opening gap, that makes sense to reverse. Then on the 1 minute, we came down and broke market structure. And I guess what really tipped its hat is, so on that 1 minute break in structure, it was this candle, it's 935 candle. It's not like it took out a significant 5 minute swing high, but we closed with this aggressive close. So we entered in off the basis 2022 model entry on the 938 candle fair value gap, the fair value gap that makes the 938 candle. Let's go look at that on NASDAQ. 938, you would have entered at the bottom here. We put our stop on the third candle that made the fair value gap. You can see it come up. The candle bodies came out of it a little bit, but that's not terrible. Remember, that's why you can put your stop up here. And then it repriced lower and lower. So that can be pretty frustrating. And something that I'm telling myself, and it would be good for you to tell yourself the same, is, it's probably just the markets being fickle. I mean, I think I actually tweeted at ICT today, and I just mentioned this. I was like, do you see any reasoning why that entry didn't happen on ES? Because I want to know if there's something, I missed, because maybe there's a gap in my knowledge. But anyway, it's nice to know that on NASDAQ, this trade was a valid trade. The model hit. And now I'm going to show you the trade ICT took, because he entered here, and on ES, so going back to ES, we really entered, like, he had the same draw on liquidity in mind as us. Actually, I'll just let you yourself go look at his Twitter, or we can see if I can pull it up. I think I can pull it up. Here we go. So we'll watch his video. I don't know if you guys are going to hear the sound. I'm going to mute it. Oh, no. I think this is him highlighting. Let's see what he does. Yeah, so you can see here, he went short off the same premise that we did, the same pullback. Breakaway gap, targeting the liquidity. So here it is right here. So I think this is one of the reasons why he's also been trading NASDAQ. The price delivery is just cleaner. And one of the reasons I'm not trading NASDAQ, I mean, I could make the effort to switch over to it, but I've spent the whole year training my eye on ES. And when you watch these candle prints, NASDAQ moves faster. That's kind of well known in the trading community. NASDAQ has, larger pullbacks and then larger ranges. So my eye has been trained so well to ES that if, say, for example, this is a good example. This run right here, you have 1, 2, 3 fair value gaps. On ES, when I've trained my eye to ES, I might be like, oh, okay, like, just like, the ratio and the size of the candles, I'm like, ES doesn't really, like, you're used to how much it pulls back and it ebbs and flows, and I'd be like, it wouldn't come up and, like, touch any of this, but then NASDAQ can. And it's funny because, as I'm saying here, NASDAQ has more aggressive pullbacks. We're the ones that got stopped out because it pulled back way farther in ES. So the markets are fickle. Trading's hard. Shit's hard. But just I'm looking at this as we mapped out a trade. We had a narrative in mind. We actually had the same exact narrative as our mentor. Same draw on liquidity, same entry. We were just trading ES, and ES had to be a little bitch about it. Be proud. saying this to myself right now. Be proud that we had it all right. We had it. You had the narrative, you had the draw, you had the entry. So that's something to be proud of. Go back to ES. Okay. Just wanted to kind of show you guys my thought process around what happened there. We broke lower, and then this could have been another entry, but what I was really doing was I was trying to be disciplined, and I was trying to wait until 10 o'clock, because one of the good things is, there will be a silver bullet at 10 o'clock. So 10 o'clock came, and again, we were above the sell side. And I was like, okay, we have about 10 handles probability. We have 10 handles. You need 10 handles. This was our model. This was our model beautifully. I entered on this candle, and then we very patiently sat through all this chop, and I originally had my stop loss up here, and as it was entering, I ended up moving it to the top of here, because I noticed NASDAQ ended up taking this first low. So these were equal lows. If you can see on the 5 minute, these were equal lows on ES. They weren't equal on NASDAQ, but NASDAQ took them. I saw it was really struggling to chop. And then I noticed the dollar right here. Like, if the dollar was continuing to make clear highs and clear lows and clear higher highs, I would have been like, oh, we got this all day. I was actually pretty confident in this trade. But I saw NASDAQ take this low. I saw the dollar start to do this. We made this high. We came up. We didn't take that high. We came down. We came up. We didn't take that high. And I rolled my stop to right here. And when I saw this candle break lower, so remember, since the markets are fractal, and I think yesterday we took a trade, and we've taken a few trades where I've explained, the market's going sideways, and when you see it reverse, we'll be able to see this when we talk about the PM session. So we're going sideways, and we have this consolidation. When it breaks lower like this, I'm expecting it to continue going lower, but if it breaks lower below this consolidation and then reverses like this, on the micro, so like if the 30-second, the 15-second time frame, where this is a lot more candles and this is a big structure, what it's doing right now is it's creating a mini swing to take stops and then reverse on them. So when I saw this candle print aggressively lower and then this next two print aggressively higher, I was like, that's when I knew. I was like, this trade's over. So I manually exited it right here. I waited, I saw the candle body print, and I was like, as long as the candle body starts to keep respecting it. But I think I noticed this one closed pretty strong, and then this one open, and it went like a tick up, and I was like, exit. So I manually exited that. We came up to this area also right here. So why this area? What's significant about this area that price came down to it and just stopped? Well, it's right at the consequent encroachment of this 5-minute wick. Remember, ICT wicks are PD arrays, and he's said in videos before, partial. I think what he was trying to explain was why partials are important. Partials are important, and you should take partials even at consequent encroachment, wick consequent encroachments. And he said there was a while where he wasn't doing that, and when he did his back test and he realized price is turning around at the consequent encroachment of these wicks. You can see the candle body, all the candle bodies were closing, respecting it here, came down, touched it here. Every time it would close below it, it would shoot right back up. So that's why price stagnated right here. It was the consequent encroachment of this 5-minute wick. And that was rough. Oh, another thing too, I didn't listen to the rules. I was so confident that I thought it was going to go down here that I had my take profit down here. Go back in the video and watch it. But it did end up going 5 handles. No, sorry. So the bottom of the fair value gap, it went 5 handles. right at this candle. This candle broke 5 handles. So if I broke a rule, and I always tell you guys take the first 5 handles, and I tried to get a little cocky and braggadocious, and I put my stop loss on my take profit down here, and I was like, oh, I will, in one trade, I'll get it all back. But no, because this morning that loss was a little more than 5 handles, and I wanted to try and make it up. So that's an example of where being greedy bit you in the butt, because if I listened to the rules and took 5 handles, we would have had a smaller loss day. We came back up. What happened here? That was my exit. Then we broke lower, and I had a feeling we might have returned into this fair value gap because we had this gap on the 5-minute. And I had a feeling we would return to it, which we did. So I read price well there. Price really met all the levels. We came back down, and I entered here. This was me chasing price. I entered there, and then I realized, what am I doing? I just took 2 losses. I'm not trading rationally in my head. So that's why I exited immediately, and we walked away with break even right here. Came down, retraced. Okay, so those were our morning trades. Afternoon trades. We didn't take any afternoon trades. So in the afternoon live stream, I explained how if this market structure right here was just in the 2 to 3 p.m. window, I would have entered using this as an inversion. I feel like that's kind of a bread and butter setup for me. I like it. Remember what I was talking about earlier when we had right here, time prices fractal. So we had this consolidation on imagine this consolidation on the 30-second and 15-second. Price manipulates lower just to send it higher. So when I saw that, something in me, you just have to watch price enough to know. But what this would look like if we were to drop down the 15-second or the 30-second is this right here. So this is just the 1-minute version of what was happening up there. Going sideways, manipulate lower, aggressively reprice higher. And I didn't take this because we're following the rules. Remember, I want this channel to emphasize following your rules and why they're successful, or why you're successful when you follow your rules. Disciplined trading. So we didn't enter here. Would have been nice. Price came up, came down, and I didn't know this was a silver bullet at the time. I knew it was an entry, but I didn't know it was the silver bullet. I explained to you why you would target this draw on liquidity up here a few moments ago. But what's rough about this price action, so we're just talking about trading now. What's rough about this price action is we're kind of just melting up. And I say that because it's like we come up, retrace, respect to PDRA. Come up, retrace a little, respect to PDRA. The retracements are very small. Nowhere in here, you could call it right here, take out a swing low. But nowhere in here are we really reversing to really shake up liquidity and then continue, which makes me nervous because then you're just trying to pick a top if you're trying to, or it's like not trying to pick a top, but you're just being greedy. You're trying to play this continuation, and I don't like trying to enter because, it's like, oh, well, you could have entered on this fair value, or not that. You could have entered on this fair value gap. And yeah, but it's like you didn't know. And you especially if this is your target, you shouldn't be entering that close to your target. Remember, what ICT says is we enter in the bottom 50% of where the price run originated. So this price run originated there, and what we target. So if this is the target, the safe entry would be this bottom 50%. So this would have been a great entry if it was just in 2 o'clock. for a silver bullet. This wasn't the silver bullet, but that would have been a great entry. And then this wasn't super clear. And then now we're up here when it is super clear that we're probably going to attack that buy side, but it's not safe to enter this close to a target. Came down, broke above, reversed. And again, I said it in the live stream in the PM session I was speaking, and it is painful psychologically to watch this melt up and just not be a part of it. I mean, this was a long time of you just wanting price. It's a long time. But I guess this probably comes, once you burn yourself enough time. But what hurts more than watching price run without you and you're not in it is just losing at this point. It's like you at some point you will touch the hot stove enough times where when you see it glow a pretty red, you will remember the pain, and the pain will be worse than the fact that you don't get to touch the glowy red. And in this case, the glowy red thing is price running without you. So, and it was the fact that we were coming off 2 losses. So psychologically, part of me was thinking about taking this, and there was, so many immediate rebalances in here and things off of order blocks. And if I wasn't down 2 losses on the day, I probably would have gone long here. But I could feel myself being a little emotional. I could feel myself wanting to try and win that back. And in the rules we have, my rules are 3 trades in a day, only 2 in a session. So we could have followed our rules still, but I didn't see any setup that I thought was really, really A+, because throughout this entire run up here, you could have argued both sides of the market. Throughout this entire run, you could have argued that it was just retracing to go lower, which it pretty much was. It just, we came all the way up to this order block, but it did retrace just to go lower. It just retraced a lot more than we expected. I mean, we highlighted this buy side liquidity, but it was a wild retracement. It was a big retracement, deep retracement. Yeah. So, and something I also said in the live stream that I want to reiterate here is, it's better, and this is a scenario where me having the discipline, decide to watch price and not take a trade, that builds so much discipline when you just watch price and don't trade it when you want to. And I get to walk away now knowing that I had a trade that, really I don't want to say should, but it was a solid trade and played out on NASDAQ. It was the same trade that our mentor took. Be proud of that. I had the draw and liquidity correct. Be proud of that. I really wanted to revenge trade and I didn't. Proud of that. I have a lot of reasons to be proud today, especially the not letting my emotions get to me, because remember, this trading is all about mitigating risk, and it's all about making sure your losses are small. So I'm proud that I didn't try and win this back. These aren't huge losses, but I'm proud that we didn't let ourselves get emotional, because that's how you blow counts. Like, one of the first steps in your trading towards profitability is stop blowing accounts. How do you stop blowing accounts? When you lose, you stop trading. And that can be walking away for the day. But I'm proud that I've had the discipline where I can lose, want to take a trade, even see maybe a few places that would make sense to enter, and then I just let it go. Because I know and I trust my ability that a day will come where we have an A+ setup and a way more clearer setup, and then waiting for that is really important. And what I get to do is I get to go into the next trading session more confident, because yes, I did take 2 losses today, but if I took a 3rd loss, that would have been a knock to my confidence. So now, we have to accept trading. We have to accept losses in trading. I've been on a pretty nice winning streak. So we had a red day. That happens. It should happen. Your account equity should look like a stock chart. It should come up. It should have pullbacks. It should go up. It should pull back. It should go up. So today was a red day. I think I've been green for like 8 days in a row. So makes sense. Yeah, I think I would have felt worse on the day if I had tried to trade and take another loss. Because then I didn't have the discipline. I wasn't disciplined. I chased, So, getting to the topic about the analyst and the trader, something ICT has spoke about. So, how to show this visually is the analyst in me got it all right. Right around here, I called out this new day opening gap. I said it was I even drew it out. I drew out it was going to go up there and break price. I called out the south side liquidity that we tagged. The analyst got the narrative right. The trader still lost. So that's why in the description of that video I wrote how you can still be on sides and lose, because the trader lost. I entered here, and the thing is, the trader is so much more complex than the analyst. The analyst just marks out the levels, and it's more of a technical science. The analyst. The trader is when emotions get involved. It's when you have to execute quickly and emotionally, and you have to watch your trade. So I entered here. Again, everything I said, everything the analyst said was correct. Came back, hit my stop. Came down, watched it, called out the PD arrays on the way down. Came back up. This, I'm pretty sure, also delivered on NASDAQ. Let's take a look. It's the 10 o'clock candle. NASDAQ's 10 o'clock candle. Right here. Okay, well, it wasn't the exact candle, but you can see during that 10 o'clock hour, it was also playing around in a fair value gap here. You can see another fair value gap here. Both of these fair value gaps, if you had entered and put your stop at the high of the fair value gap candle, you would have gotten your target, your first target on NASDAQ of 10 handles. Damn. Look at that. You would have got it almost immediately on NASDAQ. And then there wouldn't have even have been a pullback reason. Like if we had 2 contracts on, that would have been, a 60 handle run. Even right here, if you entered on this one. Look at that. 41 handles. So both of my trades that I took on ES today, if you were to execute those on NASDAQ, they would have played out. And this would have been our draw. So again, it's the trader. The analyst had it all right. It was harder for the trader. But I'm proud. Be proud that you had the correct narrative. Because more often than not, it'll work out for you with, because again, we're following a proven model. So we just have to wait for another day and follow the model again, and we'll see profitability. Just don't blow accounts on the way there. In terms of my outlook for tomorrow, probably should have put that before the whole psychology talk, but in terms of my outlook for tomorrow, I like that we closed below this daily fair value gap and below the consequent encroachment of this weekly wick, and we're in this weekly fair value gap. Now, to be honest, I think, and ICT said this morning, it would be smart not to trade, because this is our weekly objective. So we already met it. It's kind of like one of the reasons why I didn't trade in the afternoon was where was the clear draw on liquidity? We already met the higher time frame weekly objective. Yes, we mapped out lunch, sell side, and buy side, and yes, we were correct in reading and analyzing what was going to happen, but it didn't have to go all the way up here. So if you wait for next week, wait for a new weekly candle to print, then we can start framing new narrative around new PD arrays. I will probably be on tomorrow, but there's a high chance I don't take a trade around that. You know, again, I want to close out the month of October strong. It's been a really good month for me. I want to make a video that is comparing my October and my September to show you guys, because my October is a lot better than my September. Got a new day opening gap. So yeah, there's a lot going on in this past 2 days. But anyways, yeah, so sorry. Getting back to tomorrow's bias. So we just opened with a gap up. It's going to be another new day opening gap. I like that we closed below the consequent encroachment of the weekly and below this daily for value gap on this daily candle. The weekly candle has yet to close, so remember, and this is another reason why I probably won't trade tomorrow. It could just kind of hang around and go sideways and then close right on this, because look how close we are to this weekly wick, consequent encroachment. This is an area that the candle body can close on. Look how close we are to it. It could just chop sideways, use it as a middle point, and then end right on it. In terms of ICT's TGIF, I also don't see that being super in play tomorrow. It could be. Maybe. We'll see. Depending on how price goes overnight. I would expect tomorrow to be a down close day. So that's my prediction for tomorrow, a down close day. Because we closed below these two levels on the daily. So I think it wants to stay in this weekly for value gap. Cool. I appreciate you guys taking the time to watch this video, and enjoy your night.